Hey guys, I'm Brett Chappell with Fairway Independent Mortgage. This is your 5-minute market update. At the end of this video, you're going to know about the top 3 things affecting the market and interest rates today. In the greater Greenville area, the median price continues to increase. We've seen a year-over-year jump of 5%. The median price is $192,525. Days on market continue to drop. Average days on market in greater Greenville area are 54 days. As most of you know, inventory remains low, but it is increasing slightly.
As you can see here, supply increases with price. 46% of all sales last year were at or above the median area price, meaning activity is still strong in the higher price ranges. Levels are drastically low below the median price, showing a continued need for affordable housing in the area.
Rates took a big jump in the beginning of February with the release of that jobs report. America has seen the greatest pay increase in a single year in over a decade. We saw nearly 3% jump in income wages last year. The federal funds rate was too low for way too long. The fear of inflation will continue to prompt increases throughout the year.
The feds held their funds rate at 0 for almost 7 years. In addition, they were using taxpayer money to buy mortgage bonds through their QE or quantitative easing strategy, which held rates artificially low for a very long time. QE is over and interest rates will continue to increase as the feds sell off those bonds, which is really a good thing for long-term market sustainability, bringing private money back to the mortgage market.
Interest rates are still historically low. We're in the mid to high 4s. Probably by the end of the year, we'll be over 5 for a conventional 30-year fixed mortgage.
When buyers are concerned and talk about rates going up, I show them this chart. It's important to help consumers keep perspective on rates. We're still offering 30-year fixed money below 5%, and that's really good. Fixed rates in the 3s are long gone, and hopefully we never see them again. It takes artificial market conditions to get rates that low, and that means extreme volatility.
I'm often asked about a housing bubble. Is the market going to crash? Buyers are worried about overpaying on their properties, or maybe we're going to wait and see if prices come down. You know, things are just so different today than they were 10 years ago. In 2006, 2007, leading up to the market crash, anybody could get a loan if they had a pulse.
As you can see, there was a significantly higher percentage of loans made to borrowers with lower FICO scores pre-recession.
I call them have a pulse home loans. If you have a pulse, here's your house. That's no longer the case. We put together a really safe pool of loans with stringent underwriting criteria. These are full documentation loans, most of them 30-year fixed mortgages. Very different than pre-recession going back into the early and mid-2000s.
The vast majority of loans made today are Fannie Mae, Freddie Mac, FHA, and VA loans, which are highly successful loan models. What is not happening today is the private securitization of mortgages, where huge tranches of loans with short-term adjustable rates are bundled together, stamped with a AAA rating, only to be sold as solid performing assets. We all know that didn't go very well a decade ago.
So what does all this mean for the market? Sellers are still getting more money in less time. Prices continue to go up. We're seeing inventory levels rise as interest rates have moved up a little bit.
The highlighted area shows the annual increase in total units sold in the greater Greenville area, the jump in median price, and the continued drop in days on market. This year, as rates go up, expect these figures to level off, but there is no expectation of a retreat or correction.
But the increase in rates is offset by the increase in income. A 3% growth for somebody making $75,000 a year is almost double the amount of the increase in interest rate. Migration patterns are very important. As you all know, this area is growing quickly, and that is good news for housing sustainability.
Your clients are looking for a superior loan process with a 15-day close guarantee, download my Fairway Now app, where applying and uploading documents is simple. You'll never wonder where we are in the loan process, as you and your clients can track the loan status in real time, keeping updated every step of the way. Prospective buyers can also use the app to search for homes with direct access to the live MLS data, where you can see 100% of the homes being offered in a local area. Unlike those other sites where data is incomplete and often inaccurate.
I'm Brett Chappell with Fairway Independent Mortgage, home of the 15-day close, and that was your 5-minute market update.